Hello and welcome to another edition of Capital Calculus. I am your host Anil Padmanabhan. In the last decade, India completed the task of providing a bank account to every household. In fact, it is considered to be one of the biggest stories of financial inclusion. But here is a startling fact. Millions of these accounts remain unused. Worse, households continue to depend on informal sources of borrowing as well as fearing digital payments. But now, a new review conducted by the Reserve Bank of India has called out this gap and suggested a new blueprint. This looks to combine finance with skills to create a conducive environment for economic empowerment, particularly for women. The idea is to transition from financial inclusion to financial well-being for all. To understand this fundamental pivot that Reserve Bank of India is attempting, we have in our studios today Shinjini Kumar. Shinjini, though she has a stunning bio which includes an ex-RBI, she likes to be called a veteran financial services person and an author. Welcome, Shinjini.
Thank you, Anil. Thank you for having me.
Okay. Shinjini, just to set off the context, your thoughts on how financial inclusion has played out in India, from no access to near saturation coverage of all households in India.
I think it's in summary, it's a great story. As you said, we started with with a very poor track record. I mean, I remember in the 90s when I joined the Reserve Bank of India as a young officer, the agenda of inclusion was not articulated in this even with this clarity. It all happened after that in those coming decades. And as we have moved on in this period of time, we have successfully navigated a fair bit. And of course, the trophy achievement is the providing households to 89 to 96% of individuals. And it's also very interesting that that does not have a significant lag in terms of gender, those macro statistics. But like everything else, the devil lies in the detail. And as you begin to unpeel this story and begin to look into the not even the nooks and corners, but just the second level of this gigantic problem that we have been trying to solve for all these years, then you start to have a very mixed track record. And I think the idea that this document is called a National Strategy for Financial Inclusion is also very interesting to me, because it's kind of like saying that, okay, we've been doing something and we've done something, but let's now put some strategic focus on this where it is. So I guess it's a good story, but it needs to be better. It can be a lot better.
Maybe that strategic focus was missing in the past, which they're probably seeking to correct. But what you're saying is true. The devil is in the detail. As I mentioned in the intro, millions of accounts remain unused. So it defeats the very idea of financial inclusion, right?
Yeah, I was on the I was a member at large on the CGAP Council, and they conduct this study called Findex. You might have seen the statistics, and I think this report also cites their statistics. And it's very interesting because they study this phenomenon across the world, and there are pockets of developed world where exclusion exists, right? And as the world becomes more conflict prone and there are various problems, there's more environmental crises which also impact households and their financial stability. As we become vulnerable on many different fronts, financial exclusion is a reality for many parts of the world. So India is not alone in this story. Our numbers are very large, and therefore sometimes, because our numbers are so large, we become the number farm for success stories. So and it's true for everyone. It's true for Meta. It's true for Google Maps. It's true for any product that requires a very large number of people. So in the similar way, for financial inclusion, for under the PMJDY or even before that, the entire BC scheme and opening of bank accounts has been something where volumes have picked up and done quite well. So, but the Findex studies that I come back to have repeatedly pointed out that the utilization of these accounts is very low, and almost 25 to 35% accounts are inactive. And that's not it. In the activity parameter, the gender gap is much bigger. So it's very interesting that on the account opening parameter, the gender gap is not so big. So women have accounts and men have accounts. But on the activity parameter, suddenly you see a bigger drop for women than you see for men. So, and women and other population segments. So when you actually start to dig that up, you start realizing that not just that opening a bank account is not enough, but also that opening a bank account enables different population groups differently. So to answer your question about the strategic focus and whether what we were doing earlier was non-strategic, I wouldn't like to say that it was non-strategic, because inclusion has been a political agenda of a significant kind across the country. And I remember the early days of the NREGA program, which was which spent a significant amount of thinking about how to make this money reach the beneficiary. So right from the time when Rajiv Gandhi said that 2 out of 10 rupees or some number that reaches the poor, I think trying to solve that problem was a very strategic intent, and it succeeded. It was, to a very large extent, government payments have been the biggest success story. The fact that we have the largest number of accounts and the activity levels that we have also has to do with the fact that governments have actually put a lot of weight behind it. So to that extent, I would say that it is strategic for people in whose strategy these people count. It is not strategic for people in whose strategy these people do not count, and that includes banks. Okay, and that, unfortunately, now that also includes a lot of fintechs, and we'll talk about it as we go along. But for somebody who's watched the fintech sector emerge in India and roll forward, I also think that there has been this dalliance with the people has not translated in financial well-being of people, for which they're not the only ones responsible, and they are in no way capable of doing it by themselves. But the fact that this document talks about multi-stakeholders, and that's one of the things that it introduces in the mix as something which is a gap, I think that is definitely a strategic pivot to that extent. But otherwise, the idea of inclusion being actually to create access and to help vulnerable segments to have more resilient financial lives is not a new idea by any means.
Absolutely.
Yeah.
In fact, the point you made on that when you give a bank account, you don't differentiate between gender. But when it comes to utilizing bank account, there's a very stark division that's available. So which brings me to an obvious question. There are limits to which RBI can push financial inclusion. This is a political question, what you said, that how women, the bias or prejudice against women utilizing a bank account. There are various social reasons for that, varies across the country. So are we also signaling here that there is a limit to which the Reserve Bank in India can push financial inclusion, but beyond that, you need political heavy lifting?
That's a very good question, and it's a very long-standing, eternal dilemma on whether policy precedes social change or whether policy causes social change. Now, I am very strongly on the side of policy causes social change. I don't think policy follows social change as much as it can cause, because I will give you an example which is also related to this, and that is girls on wheels, girls on two-wheelers, girls on motorcycle. Now, that is something which when I was growing up in Bihar, I could not have imagined that a girl will be seen on a two-wheeler on the road. Okay. Today, you go to the remotest parts of Bihar or any other state in this country, and you see girls on two-wheelers. And that is, I think that is the biggest enabler of change in this that this country has seen. It's bigger than all the capital that we have deployed into various other things that are talked about and are on the newspaper headlines every day. So to say that this social change, because social fabric is so difficult to change, and therefore interventions don't work as they are intended to work. So lots of people in this country have this very interesting way of looking at it, and they say we don't differentiate between genders. So when we make a product, the product is available for everyone. So why do you guys keep cribbing about when women don't use it? Like, there's only that much that we can do, and then we can't do anymore. But that's really to some extent not true, and we can talk about very specific examples of why product design itself excludes certain population categories, and why products created for a user is usually created for a man, and that's known across the world. And there has been, and this is not even a new awareness. This awareness has been there for a very long time, right? Whether it is automobile design, or whether it is footwear design, or various reasons to believe that this is how it has panned out. And so it's no different for financial services.
But to be fair to this government, which is in power now for 11 years, they have singular focus on doing things with women at the center.
Yeah.
It's not just bank accounts, toilets, cooking gas, drinking water, which is a real challenge. Most Indians don't realize that, but in rural India, it's a massive challenge. So to their credit, they have been focusing on that. But I was asking that as an institution, RBI can only go this far.
Yeah.
Rest, you need political heavy lifting from the government. Or the politicians, whoever it is.
Yes and no. And before I come to that, let me tell you one thing. Every time that somebody tells me that this cooking gas solution is for women, I am like, the men eat the food that gets cooked on it. So it's not a solution for women. So one thing we have to really learn, two things we have to really change. If I had to, make a plug. One is that we have to stop talking about women-focused schemes when they're actually household-focused schemes. So things that lead to the well-being of households need to be counted as well-being of households, which includes things like cooking gas, okay? When you want to make intervention for women, then you will design it better. Because by calling household interventions as women interventions, you are fooling yourself by thinking that you've done something for women, when actually it's not. So when some states put this free bus travel for women, that's an incentive for women who otherwise would find it hard to go to, go for a job or something. They are able to go and do that. And that's a women intervention. So I think that's one plug that I will make. The second plug that I would make, and I really am very passionate about this, is to stop calling this empowerment. So we have to just stop saying women empowerment, because by God's grace, women are more powerful than men. If they were to go on a strike, then it would have a far more ramification than if all men were to go on a strike, okay? So, but we call it empowerment and we kind of belittle their agency. It has to be called independence. Call it financial independence. Call it, whatever. It's basically independence. We are talking about that. So now to come back to the government versus RBI, which is the question that you're asking me, that the government has in these years gone out of its way to actually create many interventions that affect the lives of households in positive ways. And that is correct. That is true. Now, that should be generating more financial well-being for households. So if a mother is freeing her time from cooking, and she is able to, let's say, do a part-time stitching work or something, and she can increase the income of the household, that's an improvement in the financial condition of the household. Now that condition then creates opportunities for the financial system to treat this person as a valuable client, which this person was not for as long as she was only a consumer of the income brought into the household, and was putting her labor to make it into something which wasn't earning value. So this disposable we may not even call it disposable income, but even the just income, just money that households are able to generate, creates the financial needs. Now, if you ask me, where does RBI's role start? RBI's role starts right there, that when this need gets generated, whether that need is for savings, which continues to be an unmet need, or whether that need is for household credit, which continues to be a very large unmet need, whether this need is for credit to small businesses or where micro, nano entrepreneurs, continues to be a very big gap, whether this is about household resilience through insurance, which continues to be a very large unmet need, whether this is about protecting yourself from inflationary forces and losing the value of your savings, which takes you into the asset management domain, which continues to be a very large unmet needs. All of those things are squarely in the domain of RBI. That government cannot come and help you with that, right? So to say that only so much RBI can do is also not correct, because all of these are, and to say that they have not done it is also not correct. They have consistently been at it. I mean, from the time I remember when Mrs. Thorat used to be, I was still in RBI, she used to be the in charge, even before that, when she was in charge of inclusion, and we created these direct benefit transfer programs and all your old mechanisms of these state level bankers committees and NABARD, and a lot of those references are in this document as well. It's always been something which RBI has. In fact, one of the few areas where RBI actually does engage more with the industry is on the point of inclusion. So it's not that they have not done or they are not doing or that it is not their domain. It is. But it continues to elude them for various reasons. And those reasons are not the reasons which find a mention in this document either. So that's the downside.
Fair enough. The fact that you actually segued into my next question, which is on one of the pillars which the RBI strategy paper talks about, is to enable women-led financial inclusion. And here I think they seem to have taken a cue from you and are not using the lexicon that I was using about household, equating household with empowerment, with women empowerment. So they say they have many legs to it. So if we can go one by one,
Sure.
we can flesh it out better. One is they're talking about creating women business correspondents. It's not that they don't exist today. But two questions here. How realistic is it to create a fresh army of women business correspondents, and how do you, often we hear that they don't function, business correspondents, forget about men, women, they don't operate at all. So how do you solve this?
So, this is, as you know, in my career, I grew up in a village, but somehow my life became about macroeconomics and bigger things. And I used to joke that I have done my duty to poverty by being poor once and I'm not doing it again. But as it happened, I went back full circle to start to understand that problem at a very grassroots level when in my short tenure at Paytm. Okay, so when I was in Paytm Payments Bank, I traveled through Bihar and Rajasthan and UP to understand this infrastructure, which at that point of time was the core infrastructure on top of which savings was supposed to be built, because this was the microfinance infrastructure which had been built, the self-help groups, lot of government support to that, etc. There was this massive World Bank program called Jivika, which is now the kingmaker in Bihar, which was running there, etc. So I tried to understand this phenomenon of why are women not on the service provider side, and why when they are all the beneficiaries. And there are very simple reasons for it, right? By the design of that service, one is that women are not, or were not at that point of time at least, mobile. So these jobs require you to go from village to village and to do collection and to come back with money, and you will have, so the fact that we are not a safe country for women, and therefore you don't want to put them into jobs where their lives get compromised, are at risk, is certainly an important thing. But the idea of mobility is also a very important one. So now I'll give you two examples of how it gets solved. So if you know of this woman, because she's a very well-known person and she's somebody I deeply respect and admire, the Phulbasan Bai Yadav in Rajnandgaon near Raipur. She has more than 40,000 women who who do more than, I think, 40 crore of savings are part of that group of that cooperative. And she started out as a single person. Her story is in my book, by the way, so a plug for the book to read. And it's very powerful that when she starts out, she is very limited because she's in a village, she's destitute. She brings other destitute women together. They decide to save 2 rupees every week and give it to the person who needs it the most. This isn't coming out of the whole microfinance and self-help group theory that travels from Bangladesh. This comes out of her own experience of saying, okay, rich people won't help us, so why don't we help ourselves? And then she begins to do this. And she's still very small, but she's seeing some success. And then a collector gets transferred into her district who comes with that knowledge and learning of the self-help group and the Muhammad Yunus model and things like that. So he goes to a village and he gives her 2 saris, 1 pair of slippers and a cycle. And she learns to ride the cycle. And she starts her movement to build these similar structures to what she had already tasted success with. And from there, in the last 20 years, this story that I'm telling you today, and now she has a Padma Shri, and more people know about her, and she's doing some really amazing work. It is possible. So to answer your question, is it possible to galvanize this force that women have to be able to do work for their communities? Yes, it is possible. Are we doing it enough? It is not. We are not doing it enough because that collector, I mean, of course, this woman always had the fire in her to be able to solve for herself. But because that collector goes and makes her mobile, because he creates the conditions for her to, create this web of networks, she is able to take that impact to a massive level. That, I think, is something to learn from. Similarly, I'm forgetting the name of the company, but I was talking to somebody who gave me the example of a woman who is a BC in UP, and she drives a Jeep and in UP, and she carries crores of collections in her vehicle, and she is doing it. And so I think we have to learn from successful examples. There's a lot of chest beating around why women can't do this, why women can't do that. I think we have to flip that on its head, and we have to find the ones who are doing it and then understand from them what is it that works, and then simply take that and multiply that. So what I am trying to do in my book is something like that. I'm saying, okay, if this succeeds in entrepreneurship, or if this succeeds in inclusion, then is it the story that we need to tell?
We need to replicate.
Yeah, and learn from that. And again, there will be lots of nuances that will vary from region to region, because now there are safe communities, right? Like Gujarat. You go to Gujarat, you will find women stepping out on the road to eat an ice cream at night in almost all the cities. So there is that prerequisite of safety. Now, there is a prerequisite of safety, there is a requisite of mobility. They do travel on their scooters and go from place to place. Why is it that the banking system is not able to activate a higher percentage of women as VCs in these communities? So is there a community angle there? Is it just the bias on the side of the service provider? Because most of us come from very homogeneous backgrounds. So, educated people, because they're put into these classrooms in IIMs and, business schools, they come with a standardized mindset to solve problems. Is it that we are not seeing that? Or is it that there are really nuances that we need to engage and understand and then replicate? And there are people who are doing it. So the ones who are doing it are obviously understanding it and solving for it. So to very briefly go back and answer your question, is it possible to have more women BCs? And I will not even call it a BC because I think it's a slightly outdated terminology. But is it possible to find activators of better financial influence in local communities?
It's a point taken. The other issue is they've suggested is something which you have flagged earlier, gender sensitive product design.
Yeah.
We do know it's possible, but we also know there is a legacy that everything is called for women but designed by a man. So we have discussed it in the past. They don't even acknowledge how a woman's occupational profile does not follow a linear trajectory necessarily. And so savings products or investment products don't recognize that. So given that, this is also doable?
Oh yeah, of course. I mean, there is a lot more awareness of women-centric product design for sure. And a lot more people have tried it. Sadly, all three of us who tried to build it over the last 5-7 years in India, we've all failed for want of capital. Because I think we wanted to build ambitious, tech-driven product design, and that kind of money, at least I have come to the conclusion, is not available in the ecosystem. I mean, we can fund as many, FX trading and crypto trading clubs as we want, but we cannot fund something like this because it takes conviction, patience, and understanding. And sadly, you get branded as a doing good person. And if you're a doing good person, why do you need money? Money is needed by bad people to do bad things. Money is not needed by good people. Good people have to walk, barefoot and make change in the world. So that somewhere that philosophy it hurts, this kind of work.
So you're saying a mindset reset is fundamental.
Yeah, but when you can actually create a good product, sometimes you can get lucky. Like UPI is a very good product, and it's still not getting pick up from women as much as it is getting from men. Then that second order, third order problem solving is something where you need to bring in the right research, the right data, and the right people to solve for that problem. And it's very much doable, and I'm sure people will do it. But to work it ground up and to say, ambitiously, let's just build this is harder.
Okay. And then linked to this, credit for women-led entrepreneurship. So we do see a lot of schemes, national level, state level, but the RBI believes there is obviously much more to be done.
There is a lot to be done, actually, because my book is quite centered around entrepreneurship. But what I did was that I wanted to avoid the chest beating problem. So I went with this idea that I'm going to simply create a cutoff and meet women who have survived doing a business for 3 to 5 years and who employ at least 5 to 10 people. So I was looking at people who have been able to create some sort of success. And I will tell you, my finding is that 93% of the women that I met 300 women across 30 tier 2 cities. And mind you, this is the tier 2 ecosystem. So in the tier 1 ecosystem, there is at least some degree of, even though, people like us didn't get funded to take it. We got funded, but not to success. But there is, in the tier 2 ecosystem, 93% of the women that I met were funded by family or self. The rest of them were more self, like they went to work somewhere on some money. So getting that initial, there is no entrepreneurship without capital. And it's the fundamental difference in men and women starts there. If you go to a business school and, there's a boy and a girl, they go to a business school, they come back, they get a job in a bank, there are still some challenges, but they are more equitable challenges and they can be solved in that infrastructure. But in business, in entrepreneurship, because it is so inherently tied to capital and assets, that difference immediately becomes very big. So men, I'm sorry to say this, but because most of the country, barring small pockets, are, the inheritance norms are patriarchal. So most men just have to wait for their father to die to get something. It can be small, it can be big, but all they have to do is to wait it out, right? And most of them do wait it out. I mean, they get a bike in their dowry and then they wait for their fathers to die so that they will get a household.
Not
But
all men.
not all men. I'm saying the inherently, if you are a man, you at least know, you walk with that confidence that you have something. If you have something, if you're destitute, you are equal. Actually, you are equal. Being poor it equalizes, unfortunately, and we have a lot of poor people. And therefore, when I say this, I do not mean to belittle the men who actually face the same problems in many ways, and they get excluded in the same way that women get excluded. But I'm saying for the women, because they don't inherit unless they are single daughters or 2 daughters or 3 daughters. So in my book, there is a disproportionate representation of women who are single daughters or 2 daughters or 3 daughters, because they end up inheriting. Then once you have inherited, then you have assets, and then you are able to build on top of that. Or you or a lot of women now, fortunately, they are also able to access capital in their, in their homes, in their family businesses. So they are able to take positions, they are able to do something. So all of those are like great trends. So there will be some degree of equalization, but we will have to continue to solve this problem by understanding what does it mean for a woman to be an entrepreneur. And I'll tell you one very stark fact that stared at me, which was, women have late success mostly, because they spend many years of their 20s and 30s in the process of having children, or sometimes it even goes into their 40s because a father or a father-in-law or a mother or a mother-in-law or somebody close can be ill, and therefore you will take time to take care, because the care economy is largely run by the women. So it's okay. That's not something that you can change. I'm saying as a financial service provider, I cannot change that, and I'm not here to change society. But I'm here to understand that if this woman still has the ability and to build the product that she has built, and she may have slowed down for 5 years, but she can come back and she can restart and she can still make it successful, then as a financial service provider, how do I support her through that journey, which is a non-linear, non-standard journey of entrepreneurship, is something that is the onus should be on me as a service provider to solve. But today I don't need to, because we are a large country with a lot of other people, and there are so many entrepreneurs that are available for me to solve that problem with and to make return from. Why am I going to sit and solve for this? So therefore, the interventions that this strategic paper talks about on gender need to be a lot more mindful of the fact that success will not come easily. Otherwise, it will be like the Jan Dhan Yojana, that you will close the gap on numbers, but you may not close the gap on quality. And when I say women, I also mean other excluded groups. And therefore, that design mindset of specifically going and solving for a problem, and if it requires long-term capital to solve that problem, where is that long-term capital going to come from? Right? Is that long-term capital is not going to come from VCs, and you know that, and therefore and it's not going to come from philanthropies, because then it has a very different agenda. You are allowing your agenda to get hijacked by a certain type of people. So who's going to create that? So that is the strategic nature of discussion that is required when it comes to solving for entrepreneurship of women.
Fair enough. I wanted to, because of paucity of time, I'm just jumping ahead. The other thing that stood out was in the strategy paper is that they're linking finance with skills and basically your ability to create jobs or be employment friendly. So there seems to be some shift. So where RBI is saying that you can use financial services only if you have stable income sources, and you will have stable income if you have a stable job, right? So they are linking the two, which I have never heard in this conversation in policy circles.
I don't think they meant to say this, but the way this is coming across is that if you're not getting financial services, it's your fault. But let me put it this way. If you have to reframe that question, you have to actually reframe that question for the supply side. The demand side has a problem, that the people's financial lives are vulnerable and they are low value customers, and therefore they don't get good treatment. That's the problem statement for the demand side, right? Now, supply side has to solve this. So if supply side has to solve this, it has to be rephrased for them to say that people's financial lives are not going to become salaried income. So when I joined banking in the 90s, the term that became the most commonly used in the sales circles was salaried, and for some reason people used to say salaried, and I've always been very fascinated by this idea, because the entire distribution architecture that came up after banking reforms of the first decades was built around this salaried person, that you get a monthly salary, therefore the SIP, therefore the EMIs, therefore the credit card billing cycle, everything, which worked great in economies where that salaried population grew, and therefore financial services grew with that, which was America, which was also India in the 90s and maybe 2000s. But then it stopped. It kind of petered out, at least here. And now you have the Blinkit boys. Now you have the women who sell some little product or something. Now that is your large chunk of population. How do you solve for their saving needs? How do you solve for their vulnerability? How do you solve for their resilience? Are the problems that you have to solve as the supply side. Put the onus on the supply side. Right now we are putting the onus on somebody else by saying that you are not good enough. And it is true that we have very low value customers, and a lot of them. But the whole digital architecture, this was the Raghuram Rajan hypothesis, right? That if you create differentiated banks, if you create differentiated technology will help you to reach out to a larger number of people, and therefore profit pools can be created, etc. And some of it has happened, some of it is happening, some of it is difficult. Incentives are not always aligned. We haven't paid. So the strategic vision here has to be for incentive alignment between the user, between the supply side, between the intermediaries, between the technology providers. When that happens, a problem automatically gets solved. Any problem gets solved. Denim jeans are a very good example. When you would find poor people not having proper clothes. That was a real situation in India. But today, you see everybody who's working on a construction site is wearing denim. Well, it's sturdy, it became cheap, it became for everybody to afford. And when I started as a student, I used to get, I got one pair of denim jeans which somebody brought for me from Nepal, and I was eternally grateful for it. And now everybody can wear it, right? So problems get solved when that incentive get aligned, and the strategic vision is to be able to do that.
But we are seeing the supply side getting solved partially or in bits and starts. Like say the new labor reforms that they passed has now made it mandatory for all workers, whether they are formal or informal, to have a social security, and put the onus on the companies who employ them, like Zomatos and Swiggies and all these Blinkits, etc. So meaning there are parts falling in place. So I just want to another takeaway for me from this was they are moving from financial inclusion to financial well-being, capturing all that you have just said. So how do you see that? That now the universal set is much bigger when you say financial well-being.
But that's what it should always have been. Not just because at a household level or as an individual level, you cannot be serviced by just having UPI. Your needs are multidimensional, because the nature of money is that, right? You will need leverage when you need leverage. You will need inflation protection when you need it. You will need insurance payout when you need it. So it is a multidimensional problem. So that is fair. But if you think about it, even for the supply side, it is a problem that can only be solved if the supply side gets to sell a bouquet of products to this customer. Otherwise, the per customer revenue is, you cannot make this thing run. I mean, your VCs can fund you as much as they can fund you, but you can never make a payment product generate return by itself, no matter what the scale, no matter what the technology. So you will have to start using that customer for multiple products. Now the challenge is that are those products designed in such a way that they can be sold at a cost structure that helps you recover, right?
Okay. So we short on time. Love to carry this conversation further. But thank you very much for joining us today, Shinjini.
Thank you.
India's financial story is moving into a very new and important phase. It's no longer about banking the unbanked. Instead, it is about transitioning this country from financial inclusion to financial well-being for all. This is not a task that one institution can solve. This is something for the nation as a whole, including us citizens. Thank you for watching. Don't forget to subscribe to StratNewsGlobal.Tech on YouTube. Hit the bell icon so that you don't miss any updates. And please do share your thoughts, ideas and suggestions with us. I'm available on X at Capital Calculus. I'll be back next week with another episode. Till then, stay safe.